So this will be our learning objectives. How to recognize receivable, and then how to value receivable and disposal of receivable. And then we will also learn about notes receivable recognition, valuation, and then disposal of notes receivable. And then we will learn also some financial indicators, just like the inventories, which we'll learn about um, inventory turnover. So this one also will be learning also to compute receivable turnover, and then days in receivable. Now, when we say receivable, these are amounts due from individuals. These are amounts due from individuals and other companies that are expected to be collected in cash. Now, if these are owed by customers on account that result from the sale of goods and services. So basically, strictly speaking, we will only use accounts receivable if these are proceeds out of sale of goods and services. Wa gyud lain, no? Kung ano gid na siya, goods and services. So kung naa kay ibaligya, accounts receivable atong gamiton. Pero kung if you have other income other than your, like for example, ang imong main product yun, ang imong core business is you're into uh, selling ko ano, a product. So when you sell a product on account, you record accounts receivable and credit sales. However, if ever naamoy ibagibaligya nga product no nga kuan lang kanang incidental lang siya nga kuan, incidental nga product unya one time lang maybe, so naamoy gibaligya, or like for example naamoy gibaligya nga equipment because wa na ninyo gamita, or naay gibaligya nga kanang mga basta anything nga gibaligya ninyo nga dili ninyo nga main product, that should never be considered as sales. Yeah, at the same time, that should never be considered as accounts receivable. So mo na siya kung ano iyang requirement ani niya. So mo na gamito nato is accounts receivable. Then normally, ang accounts receivable, na ano siya terms. So, say 30 days. The moment dili ni mo ni siya makolekta within 30 days, wala na kolekta, no? So, what will happen is that your customer will execute maybe a written promise. So, that will become now a notes receivable. Notes na from accounts to maging notes. So again, this emanates from from sale of goods and services. So kung di mabayaran, that will be the accounts receivable will be converted into a notes receivable. And then take note, if naana ni siya, if it will become a notes receivable now, it should comes with it a collection of interest. So patungan na siya og interest. So that is accounts receivable and notes receivable. And these two, ER and NR, are considered trade receivable. Gitawag man siya trade because later on, if ever you want to convert it into cash, meaning dili pa moabot ang dili pa moabot ang term, kailangan na nimo ang cash, pwede nimo ni siya ibaligya ni siya nga receivable to a third party. It could be bank or financial institution, para you will be able to convert this ER or notes receivable into cash earlier. And of course, you'll be also paying service fee. So that's why gitawag siya nga trade receivable. So there are also other receivables that are maybe nag-advance ang inyong mga officers, like example kanang mo travel, so there will be accountable cash advances. So these are receivable at first by the company from the employees. Kay if ever dili ni maliquidate sa employee, so this will be deducted from their salary. So these are considered advances or other receivables. And these are and other receivables are considered non-trade kaya di man ni siya pwede mabaligya sa sa bangko or sa financial institution. So these are the different classifications of receivable: the AR, accounts receivable, non-accounts receivable, and other receivables. Now, um, these are typical examples of companies of which it is showing here the percentage of receivables in their assets. So if you look at Ford Motor, it's the receivable is 43% of their assets. General Electric, mao gihapon, and then you have the Intel Corporation. It's almost 4% lang. You will see the very big disparity. It's mainly because you have to look on also into the nature of the product. Now, Ford Motor kabalo man tanong mga cars na siya ranges from sa ato dinhi maybe from almost 1 million to pila na siya ang pinakamahal nila nga value sa ilang sa car. So the natural natural terms nga gihatag sa ilang client, it will be longer kay dagko man siya. So di ba kung there are mga distributors nato dinhi nga mo offer sila og 3 years nga 3 years nga terms kung magkuan ta mangutang ta og car. So likewise also with General Electric, they are producers of machineries and equipment. So this may also be subjected to longer terms. That's why mas dako ang ilang percentage of the receivable in their assets. But in the Intel Corporation, sa may ilang maligyan sila software maybe or hardware, so which are cheaper compared to cars o mga machineries and equipment. So mostly, it could be while they may offer terms, but it will be shorter terms lang. So that's why when you look at their balance sheet, mayra ang components sa ilang receivable. So the point here is that when we look into the balance sheet, we need to understand gyud unsay nature sa business so that when we look at the details of the receivables, their balance sheet and financial statement, kabalo na we have already an expectation of what we are going to see. Okay, kabalo naman ta sa ilang sa ilang nature sa business. So kung mamaligya ni siya o mga baratuhon lang or mga small items, maka-expect ka na nga mostly their sales will be on cash, or the most maybe is mahatag sila o 1 week or 1 month. But it will never be 6 months. Kay fast moving items. So that's one thing that we have considered when we look at the balance sheet, because later on, as our terminal output, you will be looking into financial report of a company, and you will make analysis. So at least we already have an idea what to expect again when looking at their financial statements. Now, so in this chapter, we'll be looking into 3 accounting issues: when to recognize, how to value, and then how to dispose accounts receivable. Now, we recognize receivable for service organizations. We recognize receivable. We record a receivable when it performs service on account. just like sa hotel, no? When you check in, the recognition of sales there is upon usage. Upon usage nimo sa room, pag check out nimo. So that's a done ko already, that's a done service. So that's the point of performance of service. Then for merchandiser, we record accounts receivable at the point of sale of merchandise on account. So this is where we need to we need to remember katong FOB destination and FOB shipping point. So that's the point of sale of merchandise. And then so example here, this is not new to us already kay kabalo naman to sa entry no. So but we'll just go through the transition, the normal uh the normal ng course of the business sa sales. So assume that Jerday's company on July 1 sells merchandise on account to Polo Company for 1,000. Terms niya 2, 10, and 30. So that the entry on July 1 will debit AR and then credit sales revenue. That's the first na entry yun nato. And then on July 5, si Polo returns worth of 100. So that's why we debit sales return and then we credit accounts receivable. We also learned this one already in chapter 6. Now, we never, in case of returns, we never debit sales, but rather we use the account sales returns and allowance. So that on July 11, Jerdis receives payment from Polo Company for the balance due. So, gi-avail ni Polo ang iyang 10 days so that maka-avail siya sa katong discount. So, nibayad siya kang Jerdis og cash 882 net of the sales discount may 18 which is 2% of 900. And then we credit accounts receivable. So at this point, the operating cycle of the transaction na-close na siya. Okay? Kuan man from na-collected naman siya. So na-close na ang transaction. So that's recognition of accounts receivable. Then how are we going to value accounts receivable? We report accounts receivable as current asset in the balance sheet, and it is the valuation is at cash realizable value. So we report it as a current asset and at the value of at cash realizable value. So unsa man ni siya ang cash realizable value? We need to understand nga every time magpautang ta, there's always a possibility na dili na siya ma-collect. So that, as required by GAAP or Generally Accepted Accounting Principle, we have to provide, by the time nga ni nag-recognize kag sales, katong utang, giutang, automatic ta mag-provide og amount, a certain percentage nga dili na to siya makolekta. So, mura magkuano kung naakay 100 nya nag-provide ka nga 1% of that will not be collected so that ang expect na lang nimo nga makolekta so mo na siya cash realizable value is 99 na lang kay you already provided a 1% or 1 peso nga that will not be collected, although these are still an estimate. Wala pa na siya. Pero nangandam lang kadaan, i-provide na lang ni mo daan ang possible losses na dili na siya makolekta. So with that, we record a transaction as a provision for the bad debts. So that's why we debit bad debt expense sa atong libro. So this is one of the adjustment that we will do in when we prepare our financial statement at the end of the period. We recognize allowance for bad debts and then we debit budget expense. So that's how we value accounts receivable. So there are two methods of accounting for uncollectible accounts. So duha ko no ang pamaagi no. One is there is a direct write-off, and the other one is the allowance method. Now, in the direct write-off, this is where we don't provide, wala tayo i-provide nga allowance. By the time by the time sa sale, wala lang. Record na katong 100, niya. Ato na to siyang kuanan, niya. Ato na lang to siyang kolektahon, no? So we don't provide hoping and expecting na it will be collected full. If ever naagid siya portion nga dili makolekta, then that's the time na mag-recognize ta og budget expense. So that's why ningon siya theoretically ang direct write-off theoretically is undesirable because there is no matching. Anong wala may matching? Like for example, I made a sale today, 20 samantanon October 2022. Yeah. Automatic ko mag-record ko sales 100, ya debit ko accounts receivable 100. So nag-recognize na ko og revenue this month, October. Nya niabot na lang ang October, November, December, niabot na lang duha ka tuig wa gid siya makolekta. So by 2 years, niingon na gyud ang niingon na ang tikolekta nga. Di na gyud nako makita ang nangutang. So, decide na lang ang management na, okay, nag-suggest, recommend na lang ang accounting to management na i-write off na lang nato ni na account. So that, ang atong recognize na to ang revenue, remember, recognize na to ang revenue today, but the expense na bad debts, atong recognize 2 years after na. So, wala siya matching of revenue and cost. Kay niingon man ta, according to our principles, there should be matching of revenue and cost. In this case, wala siya nag-match. Kay recognize nato ang revenue today, unya ang expense will be recognized 2 years after pa. So there is no matching of revenue and cost. And then, receivable is not stated at cash realizable value. Wala man ta nag-provide og 1% or katong 1 peso. So, starting today, next month, until 2 years, every month, i-report natin ihapon tong 100 na receivable. But in fact, kabalo na ta nga after 3 months of collection, di na gyud nato makita ang buyer. So kabalo na ta nga di na kita siya makolekta, but yet we did not provide we did not wala na to gi-alter ang atong value nga 100. We still reported the cash, we still reported the receivable at full amount. So what if ang value ani niya is 10 million? So the report is not reflecting the true amount or the true value of the receivable. Kay sa libro na kay collectible nga 10 million, pero in actually ay ito lang 900,000 or 9 million na lang. So dako kaayo na siya nga diferensya. So you are not reporting, you are not and the financial report is not showing the true status of the accounts receivable nga asset. So mo na siyang not stated at cash realizable value. And because of that, it is not acceptable for financial reporting, kaya we are not true and correct in our reporting. So that the recommended one is we use the allowance method, because by the time na recognize tag sales karon October, outright as required by GAAP, we provide immediately an allowance. We recognize immediately budget expense, so nagkuyog ang sales o ang cost. Kay nag-recognize kag revenue karon nga 100, and at the same time nag-recognize ka og budget expense nga 1 peso. So thereby there is matching, and there is the cash, the receivable is stated at cash realizable value. And of course, this is required by GAAP. So that is direct write-off and allowance method. So let's take a look at kuan. Bukan ng chipping. Bukan na to. Bakit na? Alam ni. Hindi nga. Ako ang lang po. Gamay lang po. Nagkaon. Si ma'am nagkaon. Okay. So let's take a look at this one. Let's take a look at the balance sheet, how it is presented. So in the balance sheet, you have the two accounts receivable and allowance for doubtful accounts. So this is the T account of accounts receivable. So accounts receivable, this is an asset. So you have here on the debit side the balance of 500. And then the allowance for doubtful account, considering this is a credit account, so you have here a provision of 25. So that is the amounts that we will see in the trial balance or in the ledger. When we look at the ledger of ER, there's a balance of 500, and at the ledger of allowance for doubtful accounts of 25. So when we look at the balance sheet, this is how it is presented. You have there the full amount of ER, 500, and then you presented the allowance for doubtful account as a reduction from the accounts receivable. You saw that your cash realizable value is at 475. So mo ni siya siya ang cash realizable value because while your AR is 500, you provided an allowance of 25. By the way, allowance for doubtful account is considered as a contra asset account because it is presented as a reduction from the kanang mother asset niya, which is accounts receivable. Or it could be presented that way. AR net of 25, so your cash realizable value is at 475. So that's how we present allowance. Okay. Now let's take a look some example. Again, let's continue the account. So your accounts receivable balance is at 500, and then there is an allowance for doubtful accounts also of 25. So during the month, there was sales made, no? So you will debit ER and then we credit sales so that we look at our accounts receivable, that will now be the balance. Okay? So na kay 100 additional, so the total ER nato is 600. And then during the month also, there was a collection of 333. So that's why we debit cash and then we credit accounts receivable. So that our accounts receivable after collection is at 267. At the end of the month, we need to provide, we need to record man provision for allowance. Can increase na ang kay 100 na nahimo. So we need to add a provision so that we recognize. So this is the entry when we recognize bad debts. We debit bad debt expense and then we credit allowance for doubtful accounts. So mo na siya atong entry gyud ha, we debit expense and then we credit allowance for doubtful account. So in this case, nag-debit siya 15. The involved amount, the allowance provision was at 15. So Ang budget expense nato, this will form part sa atong income statement as expenses, while allowance will be considered as a contra asset account, so that the allowance will be added here. So from 25 na kinadugang nga 15, so that your total allowance now is 40. Now, there was during the same period also, there was an AR that was written off. So meaning to say, di nagit ni siya nga dili makolekta. So ni decide na ang accounting i-take off na ni siya sa listahan sa utang kay di nagidugay nagit ni siya wa na kolekta, wa nagit ni dugay na ni wa nag-move. So we need to clean up our account. So naghimo na ni siya recommendation, then approve nga i-write off na ni siya, so that the write off will be, ang entry ana niya is we debit allowance for doubtful account and then we credit accounts receivable. So if you look at the transaction, pulos na siya kung accounts, pulos siya balance sheet accounts ang atong gigamit. Di na siya mo impact sa atong income statement, because the only time may impact siya sa atong income statement when we provided the allowance. And then, by the time may nga siya nga na-write off, it will never impact na the income statement. But rather, both kuan na lang siya katong balance sheet account, so that when we post this one sa atong e-account, we debit allowance for doubtful account, which is 10. So that's reducing now from the 45 to 40 to 30. And then at the same time, our receivable is reduced by 10. So from 267, nahimo na lang siyang 257. So that's that's how we the different transactions involved by the time of sale, and then where there is a collection, and then when we set up the allowance, and then if there is a write-off. So that's the different transactions that we will use, so that when presented, mawala siya ang atong 257 ang atong AR, niya 30 nato is allowance, so that our net or cash realizable value is 227 na lang. AR net of 30 allowance 227, or pwede po nato siya i-present katong i-spell out yun nato ang details. So that's the movement of accounts from accounts receivable to collection to provision of allowance to write-off. Now, let's take a look at a transaction if there is a direct write-off. So assume that Warden Company writes off ME Duran's 200 balance as uncollectible on December 12. So that Warden's entry, so kita ang libro na sa seller, with debit budget expense. We are looking at direct write-off, so meaning there was no provision beforehand. So outright, debit and budget expense, then we credit accounts receivable. So because of that, again, if you look at the transaction, there's no, we recorded an expense without the benefit of a revenue. So because a revenue na record nato ni long time ago, but yet today we recorded an expense, we are being unfair to the December operation. Like you were charging a budget expense of 200, you're charging an expense of 200, no wala siya benefit of a revenue. So that's why there is no matching. Then receivable is not stated at cash realizable value and it's not acceptable for financial reporting. So that's the the consequence of using a direct write-off. This is not acceptable for financial reporting. Kung mag-direct write-off ka, you will be ikuan yun na siya. You will be questioned, and this is not acceptable by the IROs. So these are the entries that we will be recap. These are the entries that we'll be using Allowance method for uncollectible accounts. Companies estimate uncollectible accounts receivable. And then we debit budget expense, and then we credit allowance for doubtful account. And this is considered a contra asset account, just like allowance for depreciation, which is considered also a contra asset account because this is in the presentation, this is deducted from the fixed asset account. And then by the time of write-off, we debit allowance for doubtful account and credit accounts receivable. Okay? Mura ba siya pinigot to? Mura pinigot to. So recording of estimated uncollectible. So let's go to kung ano kanang let's kanang illustrate na to ang recording of estimated uncollectible using the allowance method. Uma naman ta sa kuan direct write-off. So how it is when we record use the allowance method. So example here, si Hamson Furniture has credit sales of 1.2 million in 2017, of which 200,000 remains uncollected at December 31. The credit manager estimates that 12,000 of these sales will prove uncollectible. So ang 1.2 million, this is for the year 2017, whole year na siya na sales. But at the end of the year, there was uncollected na 200,000. So that at the end of the period, we should have a budget expense of 12. Kaya mo siyang i-estimate na uncollectible. Budget expense na 12,000 and credit allowance for doubtful accounts na 12. So that will be the entry. Now, so this will also be, this is also how we are going to report. You have the 200,000 less 12,000. So cash realizable value is 180,000. And then, okay. Now, so, what siya ang gagano na kay allowance? Out of the 200 na kay gi-provide na out of the 1.2 million niya receivable nga 200,000, you provided a 12,000 nga budget expense, or that's your allowance for doubtful account. And then on March 1, remember this is December. On March 1, the Vice President of Finance of Hamson authorizes a write-off of the 500 balance owed by RA Mayor. So again, as katong atong when we write off, we debit allowance for doubtful accounts and then we credit AR. So that when you look at the key account of AR, you will see there 200,000, and then there was a write-off of 500, so that balance niya karon is 199,500. Diri naman sa allowance for doubtful account, your balance in December is 12,000, and then by March, there was a write-off of 500, so that your balance is 11,500. Okay. Now, on July 1, so remember this was on March. Pero pagka July 1, nakulikta na dahil niya ang katong 500 nga atong gi-write off. So with that, there will be two entries na dapat atong himuon. There will be two entries na dapat atong himuon. First is we need to restate back the AR. So ibalik na to ang atong account receivable. Remember ato na ni siyang delete, ato na ni siyang out sa listahan, gi-credit nato ni siya. So pag kolekta nato, atong ibalik ni siya sa libro. Nang mag-debit ang AR 500 and we credit allowance for doubtful account. And at the same time, that's the time na mag-debit ang cash and nakolekta man nato, and then we credit accounts receivable. So this account here na close with this transaction. So nagpabilin karon kani niya kani. Okay? So that is recovery of an uncollectible account. Now, there are two methods of estimating an allowance. There is the percentage of sales, and then there is the percentage of receivables. So, duha ka method no, ang atong gamiton, percentage of sales. These both are acceptable. Depende ni siya, it's the company who will decide kung sa ilang gamiton. Now, the percentage of sales, this is where emphasis is on the matching of revenue and expense. Kay, ang atong basis is kuan man. Every time there is a sale, we outright record mo record tao mo record tao provision for an allowance for doubtful accounts or budget expense. While ang percentage of receivable, our focus here is the cash realizable value, of which our basis here is the outstanding receivable sa companies. But just like kanina, no, sa atong example, here, naa siya 1.2 million na sales. At the same time, naa siya 200,000. So, sa percentage of sales, our basis will be the 1.2. And then, if the method is based on percentage of receivable, our basis will be the 200,000, the remaining uncollectible account. So, maana ang kuan two methods. So either na siya, it's either you use the percentage of sales or you use the allowance method based on receivable. Okay. So here what we will do is just provide, like here, na siya, assume that Gonzales company elects to use the percentage of sales basis. It concludes that 1% of the net credit sales will become uncollectible. Before that, di ay kanila at aning ikuan. Now, in the percentage of sales, management estimates what percentage of credit sales will be uncollectible. So this percentage is based on past experience and anticipated credit policy. So it's not that walay basis. Naa siya past history, this will be incorporated in the credit policy kung pila ang kuan. So dili lang si accountant ang mag-vote ani, so there must be a policy that will cover pila ka percent ang iyang i-provide. Okay. So that in here, 800,000 ang iyang entry, so that will just multiply 1%. So your provision will be 8,000. So that's why you debit budget expense 8,000 and credit allowance for doubtful account 8,000. So that's our entry. So that in here, so there are bantayanan nato. The emphasis here is matching of expenses with revenues. Adjusting entry to record budget disregard. The word here is disregards. Okay. We disregard the existing balance. In here, we look at the allows for doubtful account. There is an existing balance of 1,723. So we don't mind this balance, but rather we just go ahead with the 8,000 based on the 1% of the 800,000. So that's why we debit budget expense and then we credit allowance for doubtful accounts. So with this, ang total na nato nga allowance is 9,723. So that is percentage of sales. Okay. So let's go to percentage of receivables. So management establishes a percentage relationship between the amount of receivable and expected losses from uncollectible accounts. Definitely, the losses will be coming from the uncollectible ones. So it could be the 1.2 million. Of course, from the 1.2 million, we were able to collect 1 million, di ba? Kaya 200,000 naman lang yung nabilin. So we were able to collect 1 million. So ang atong problema ho na lang ang 200,000. So that's why our basis is percentage of receivable. Again, policy will be this will also be covered by a policy as to what percentages will be used in the provision. So with that, if our basis is percentage receivable, we have to prepare aging of the accounts receivable. So may kag aging atong atong tagaan atong edad pila na ka months ng atong receivable. So with that, this is a typical example of aging of accounts receivable. So these are your customer. Then imo gid na siyang lista na nimo siya tanan. And then you look into the details of this, unsay mga sales kuanan niya no date kano saan siya nabaligya. And then ato ni siyang i-classify as to not yet due niya number of days past due 1 to 30 days, 31 to 60, 61 and so on. And then mahimo na dai nimo na siya ma-breakdown na din nimo ni siya no pila ang not yet due ani. And then after which wala na siya atong multiplyan sa kuan percentage. These are according to credit policy. Na siya policy statement ani. So in this case, niya siya for not yet due, they estimated at 2%, 4, 10, 20, 40. So if you notice, as the number of past due increases, the percentage also increases. The company I worked with before, we provided actually katong over 120 days. We provided 100% already nga uncollectible. Uncollectible na siya. That's how we provide the estimated. So that next is multiply na lang nato na siya. And that one, these are your product. We add up that one. And this is our total estimated bad debts. No more, no less. Kinira gyud nga amount ang atong base kini atong i-report nato nga estimated bad debts. Unlike dito sa percentage of sale nga we don't mind if there is a beginning balance. We just provide outright the 1% based on the percentage of sales. So in here sa percentage of receivable, whatever we compute, that would be the amount that we will use. So that next nato nga question is how much budget expense we are going to provide. So in this case here, according to the problem, naano siya beginning balance ng 528. Okay? So naano siya beginning balance nga 528 is 1. And then this is the amount that we need to report provide, so that ang difference na lang ang atong kuhaon to the last centavo actually, no, to the last centavo. Kay accounting records will always be presented in to decimal points, centavo. So whatever difference nga na mo na himuan natog entry, so that in here ang difference niya is 17. So we debit budget expense 17 and credit allowance for doubtful account 17. And then so that your balance here, desired balance at end will be 2228. Again, this is based on the computation we did earlier in the aging of accounts receivable. So, kana siya. So, we're done with the valuation. Recognition, valuation of accounts receivable. Now, how are we going to dispose accounts receivable? Under the normal course of the business, we collect receivable. The conversion of receivable to cash is upon collection. Yeah, upon maturity, no? Upon within the terms, 30 days, so makolekta nato na siya within 30 days. And then, it could be, di na nakapaabot sa 30 days, kay we need now cash. So companies, so that because we need now cash, we can sell our receivable to any banks. Actually, it's not any banks, but with our partner banks. Kay we need to we have partner banks, and then when we have partner banks, we have outstanding murag ko ana na no, we have outstanding arrangement already nga we are accredited, gitanaw na nila ang atong financial statements, dili ba risky ang transaction kung atong ibaligya ang receivable sa ila, because they know already our business, so we can sell to them our receivable. So receivables could maybe the only reasonable. When companies sell receivable for two major reasons. Receivable may be the only reasonable source of cash, or billing and collection, often time consuming and costly. So instead na ikaw mangolekta, ihatag na lang nimo ni siya sa financing companies, collection companies, and then they will be the one to you sell your receivable, then you will receive cash earlier than the term. So that the term that we use here sa sale of receivable is factoring, no? You factor your sales, your receivable. So this your receivable can be sold to a finance company or bank, and then this finance company or bank buys receivables from businesses and then collects the payment directly from the customers. So sila na ang mag-collect. Typically charges a commission to the company that is selling the receivables. A fee ranges from 1 to 3% of the receivables purchased. So this is also a part of their part of their business model. They will be buying receivables from their partner companies. This will also be a source of their income. Kay they will be collecting kuan man service charge. So that is factoring. Example here, assume that Henry Don Furniture factors 600,000. Basta kung minggali kag factor, gibaligya na siya 600,000 of receivable to federal factors. So federal factors assesses a service charge of 2% of the amount of receivables sold. So the entry here sa nagbaligya, debit check cash 588, net of the 12,000 na service charge, and then credit accounts receivable. So with this, na-close na ang accounts receivable. So bahala na sa federal factors, manguliktaan na. Okay, so that is factoring. Now, how about credit card sales? So these are also recorded the same as cash sales. So kita ang business, then mo dawat the credit card as payment, we record credit card sales as cash sales. Ana na siya. But we charge we pay our credit card provider some service charge, so that we debit na lang cash net of the charges 970, and then credit the revenue 1,000, and outright we charge 30 as service charge. Now, notes receivable. So companies may grant credit in exchange for a promissory note. A promissory note is a written promise to pay a specified amount of money on demand or at a definite time. Promissory notes may be used when individuals and companies lend or borrow money. So when we borrow money from the bank, that is considered a notes receivable. Then when amount of transaction siya and credit period exceed normal limits, katong atong giingon kanina, no, mga normal limits na 30 days supposed to be ni kuan ra siya kanang nilapse na, or in settlement of accounts receivable. So that this is an example of a notes receivable. And then because notes receivable carries with it an interest charge, so this is how we compute the interest revenue. Ikaw man ang sa promissory note, so that we need to recognize interest income. Yeah, if dili pa siya due for collection, kailangan na ka nga mag-recognize of income So instead nga mo receive kag cash kadi pa magkabayaran, we instead recognize interest revenue. So note is expressed in terms of months and days. So this is the formula. You have the face value of the note times annual interest rate. Remember, ang interest rate niya is deemed to be annual. Then time in terms of 1 year. So that is your interest receivable we collected. So when counting days, omit the date the note is issued, but include the due date. So what does it mean? So kung gi-date ka ron, you start counting tomorrow. Until the due date. So mora na siya buti pasabot. So example here, terms of note, 730 ang face, annual interest is 12%, then ang ihang term is 120 days. So that when you compute 730 times 12% times the yung fraction of 120 over 360. It will always be 360 when computing the interest receivable. So 120 kay good for 120 days naman na siya nga interest, but the 12% is good for 1 year. So 120 over 360, so that is 29.2. Or it could also be expressed in months. So here, 1,000, 9%, 6 months, so 6 over 12. That is your amount. Then it could also be expressed in year. So 1 year siya, so 1 over 1. Kung 1 year ang iyang collection. So that's how we compute the interest. Okay. So example here, si Colhon Company wrote a 1,000, 2 months siya, no? 12% promissory note dated May 1 to settle an open account. To settle an open account, so meaning, gi-settle niya ang iyang accounts receivable kay di niya mabayaran. So, naghimo siya promissory note good for 2 months. So, the entry will be notes receivable and then close the accounts receivable account. So, ato siyang i-transfer. I-close na to ang ER, then we open a notes receivable account. And that is on May 1. Okay. Okay, so valuation. Recognition man nato nino sa notes receivable. So how are we going to value notes receivable? How are we going to report? Report short-term notes receivable at their cash net or realizable value. Parehas sa gihapon sa kuan katong. Remember, we provided man, di ba? We provided man the at the time nga nag-record ka, nag-provide naman ka og kuan ato kanang allowance. So that still be the same. So cash realizable value. Then estimation of cash realizables of a budget expense are done similarly to accounts receivable, allowance for doubtful accounts issues. Then disposal of notes receivable. Notes may be held to their maturity date. So kung katong kanina gi-issue siya May 1, 2 months, pwede nimo na siyang ipa-aboutan nimo ang 2 months, then until mature na siya, then you will receive the full payment. Maker may default and payee must make an adjustment to the account. So maker katong nag-issue sa so promissory note, so that the holder katong giutangan may make an adjustment to the account. Holder speeds up conversion to cash by selling the notes receivable. Pwede po nato ni siya ibaligya. Di ba earlier atong gi-illustrate na accounts receivable and notes receivable are considered trade receivable, kaya pwede naman ni siya ibaligya sa i-factor to some financial institutions or banks. Honor of notes receivable. Maker, when the maker pays it in full at its maturity, so there was an honor, i-honor ang notes of receivable. When the maker not paid in full at maturity, it is no longer negotiable. So meaning, by the time moabot tong 2 months, di ba na naghimo siya 2 months. By the time niabot ang 2 months, wa niya na pay in full. Di ka no longer be negotiable, dili na nato siya pwede ibaligya sa bank. Pwede rin nato siya mabaligya sa bank prior to its maturity. But beyond, di na nimo na siya pwede ibaligya sa kuan. Di na nimo na siya pwede mabaligya sa bangko. So in case here, dili siya kuan, nabaligya na nato ni siya sa bangko. So ang sila na sa bangko, ang katong maker mo ay magkuan ani no, na sila na mo ay magistorya ani out na si katong kuan, katong holder, katong initial kita man ang ni-receive ana niya atong gibaligya. So, gi-transfer na nato ang risk nato sa bank or the financial institution. So, when at maturity, gibayaran siya sa maker, we debit cash 10375 unsa man ang 375. So this is where we record ko ano, mag-record man tag revenue. So man ang 375 na siya. We debit cash, that is meaning the full amount, the principal amount plus the interest. Then we credit notes receivable 10,000 and credit interest revenue na 375. The interest revenue, so this is your, assuming there is a nga problem, nag-issue siya June 1, November 1, so June, July, August, September, October, so 5 months, no? Tumo na siyang 9%, 5/12, so that the full amount of the interest income is, interest revenue is 275. So manang nag-recognize ta og interest revenue. Now, suppose ko no, instead that Walder company prepares the financial statement as of September 30, ang maturity niya is November 1. But si holder company, kailangan niya mag-record siya, kailangan siya mag-transact siya September 30. So, kailangan siya mag-recognize og revenue good for 4 months. Remember, makolekta man niya ang interest revenue kuan pa man November 1. So, there's still 1 month to go there's still 1 month to go to collect. But on September 30, kailangan man niya mag-record o revenue. Kaya mag-close man siya siyang libro. So that, mag-record tag partial nga revenue. So that's why ang atong computation here is 10,000 times 9% times 4/12. So that is equivalent to 4 months. So manang atong mag-record tag interest receivable 300 and then interest revenue nga 300. Okay? So by the time mag-collect siya pagka November 1, we collect the full amount 10,375 and then notes receivable 10,000, interest receivable na 300. Mo ni siya ang atong na record no by September 30. 300 mo nang atong interest receivable, and then another interest revenue, the remaining 1 month na 75. That closes the notes receivable na transaction. If and when by the time at the end of 5 months, November 1, wag gihapon wala nakabayad si kuan katong maker. So outright ang atong accounts receivable ibalik nato together with the interest na. So nitako na ang atong receivable with that 375. So madako na yung accounts receivable from 10,000, nahimo na siyang 375. And then we credit notes receivable nga 10,000. Kaya ato na po siyang i-close, ibalik na po nato sa account receivable. We credit interest revenue. We need to recognize man revenue. And at the same time, nag-recognize kag additional 375. So this is the 375 represents the revenue that we earned for the 5 months. So that's how, if dili mo pag-abot sa time, dili yapon kapayad ang maker. Okay? So we're done with the valuation of accounts receivable, recognition, valuation, disposal of accounts receivable, recognition, valuation, and disposal of notes. And then how we are going to present our receivable. In the balance sheet, identify in the balance sheet or in the notes each major type of receivable. So, makita nato ni sa notes to financial statement ang iyang kung ano details. Report short-term receivable as current assets. Naman sa long-term na receivable, kay, like for example, when you borrow money from the bank, it could be short-term or it could be long-term. So, imo na siyang i-present kung current, kung short-term. Pero kung kuan, it will be presented as long-term. Report both gross amount of receivables and allowance for doubtful account. Katong atay ko ano to, less allowance or net of allowance. So that's magsibot ipasabot niya. Then in the IS naman or income statement, report budget expense and service charge expense as selling expenses. Then report interest revenue under other revenues and gifts. So that's how we report these items. Okay, so present analysis. Just like inventory, we compute inventory turnover, and then for AR, we also compute accounts receivable turnover. So the formula is net credit sales. Now you may ask, how will we know how much is the net credit sales? So normally, kanang gi-present na net sales sa income statement, these are considered also net credit sales. So net credit sales divided by your average net accounts receivable. So you have your beginning and then ending. So that is your divided by 2, that is your average. So that net credit sales divided by average AR, that will give you a turnover of 7.7 times. Now, from there, you can compute also the average collection period in days by dividing 365 by the turnover. So, days in year, 365, then accounts receivable turnover, 7.7 times, that give you average collection period in days, 47 days. So, meaning, it will take you 47 days to collect. Now, question. Is 7.7 times and 47 days a good number? It depends, no? Because we need to compare this one with the industry performance. It will also be compared sa imong competition, and this will also be compared versus your projection, or it could also be compared sa imong past performance last period. So, assuming last month the turnover was 10 times. So, anybody from the group, is 7.7 times a bad number or a good number? Anybody from the group? Is it a good number or a bad number? Hello? Anybody from the group? Hello? Naapa mo?
Napa, miss.
Naapa. Oh. Unsa man
Naapa,
ang
miss.
so good. Lipay ko kay naapa mo. Unsa man ang 7.7 times? Is it a good number or a bad number? Assuming last month the turnover was 10. Is it a good number
Bad
ang
number.
7.7? Bad?
Bad. Bad, miss.
Why is
Bad
it
miss.
na bad?
Lack
Ano
of
man?
days
Kay
lang
gamay.
kuhan, miss.
Mhm. Kay pila di ay ang average collection period last month? If 10 ang iyang turnover.
36.5, miss.
Okay, so from 36, mahimo na siyang 47. So this is a bad number. So meaning, the higher the number, the better is the result. So that's it. Okay, so we are done with our analysis. Very good, ta? So that's it. Question, people? So by Wednesday, so Saturday, our exam will cover up to inventory, and we will see you next. We will see you next Monday. Yeah, Monday we will meet Monday. Excited na mo, people? Excited na mo?
Gamay,
Face to face?
Gamay ra, miss.
Ang sa min yung gihimo nga mga pangandam? Baon.
Pliti.
Unsa pliti. Kung ano, kay kuan gid mo nga as much as possible, isa gid na siya nga require nga you are not allowed to roam around. So you bring with you your snacks or ingno na lang nimo imong classmate nga daghan nagpaon og snacks ha kay mangayo rami. So as much as possible you are not kuan good. You bring with you your snacks, your lunch para kuan dili man gid mo allowed nga magsuroy-suroy. So see you kanang Monday pohon. Okay, so that's it. Nag-upload na ba ko og activity. Wait ha. Okay. So naala ko gi-upload nga kuan activities sa accounts receivable. Ani di ay siya no. Please download ninyo ang kaning activity so we can do this. We can do this or you can go ahead in advance, but this is our activity during our meeting kay ani man gud ni siya no. We will discuss na lang karong Monday so say atong mga kuan nato mga how we are going to proceed with our topics with the changes with the blended face to face nga with the face to face nato nga meeting. Okay? So see you Monday pohon. Bye people.
Bye, miss.
Okay, bye.